This is the Euro NZD trade that I ended up taking today while paper trading. So let's jump into our whole thought process as I recorded it throughout the day. So coming into Notion, what you will see is that I recorded this. So I made note of the weekly time frame, just noting that the weekly time frame had a big bullish momentum candle last week, and there's a high chance that this week we will create a wick coming down into the 50% area potentially, and then pushing to the upside, right? So you can see those are my notes: 50% retracement. And then coming into the daily time frame, what I noted that if the weekly was to create the wick, the chances of Monday and Tuesday, early Tuesday, pushing bearish to create that weekly week before we start to form the bullish body is like high probability. So I made note of those things. And because I trade liquidity based off from previous daily highs, daily lows, with this thought in my mind that now, because Monday pushed bearish, the chances of price action potentially taking out Monday's low and then flipping bullish and pushing up into the previous day's high would be extremely high. And so that was my thought process coming into today. And you can see I marked my previous daily low, my previous daily high at the time coming into the charts. I think this was pre-London. You can see that the daily had already taken out the previous daily low on the 15-minute time frame at that moment. This was pre-London. You can see that we had already shifted bullish on the 15-minute time frame, pull back, push to the upside. This dotted line just denoting what my London session times are, and I was anticipating that we'd get 50% of the previous daily range, which was this in London session. And guess what happened? London session actually got that. Then with the New York session, I was anticipating potentially price action coming into the smart money trap. However, it didn't. We saw a impulsive push to the upside, and then you can see that price action had actually created these liquidity areas. So coming back onto the 15-minute, let me show you what I saw. So we saw this push up, impulsive push to the upside. We then saw within the trading times price action coming down and basically collecting liquidity on the 5-minute time frame, just taking it and entering it based on this bullish engulfing candle back into the range, and pretty much just anticipating that price action will push to the previous daily high, right? Now I would have gone break even at 1 to 1. Now I'm not too focused on trade management at the current moment. But I would have gone 1 to 1 at or break even at 1 to 1, and this would have probably taken me out. However, as I mentioned, the focus is merely or more so on the anticipation of where price action could go to the entry, the stop loss placement. Trade management is neither here nor there because that's something that gets refined as you get and collect more data on the strategy. What I can say is that these previous daily highs and previous daily lows, inties, and those types of things, liquidity that lies above and below those areas with the correct context in mind definitely has a great chance of playing out. So with that being said, from your boy Master at the Modern Day Trader, please don't forget that failure is feedback. Feedback is knowledge and knowledge is power. Have a great week further. Peace out, man.